Hi everyone, Arjun here from Investorkit Buyers Agency, and I'm with Terry Ryder from Hotspotting. And I just wanted to join Terry on another one of his awesome, notes around just the positive news of what's happening out here in Australian property. Terry and I have been chatting about just buying strategies during this time. I think there's a lot of people who might be on a fence of wondering whether it's the right time to buy or whether they should buy. And I think when considering any buying, whether it's during a time like this or outside of this, strategy matters. And talking about buying strategies, locations. So that's just what we wanted to go over today. And I guess Terry, in particular, one location me and you've been talking a lot about has been, I guess, the Adelaide market and its consistency there. I guess you want to comment a little bit about, in particular, their 13 days straight, no COVID cases. What a fantastic result there.
Yeah, we've recently produced the latest edition of our top 5 Adelaide hotspots report, and we decided to do a new promo for it, bringing the fact that what you've just mentioned, that South Australia has actually been more successful than any other state and territory in Australia in getting on top of the coronavirus. 13 days straight without any new cases. Only 5 active cases in the state, only 2 of which are in hospital. So fantastic. And they've actually done that without having as onerous restrictions as those that have been in place in other states, particularly Victoria. So that stands them in good stead to recover well and recover faster and stronger than some of the other states in terms of their economy. So that's a good thing. That helps their economy, it helps their property market. But going into this thing, I think the Adelaide market was particularly strong. We rated it as one of the strongest in the country as we came into the shutdown period, and it's coming out of that shutdown faster than anywhere else. So I think its property market is in a really good space to go forward, and I think far more investors in Australia should be thinking about investors than currently are.
Yeah, I think as well with the 13 days straight, we can also treat it as what I like to call a leading indicator. And I think it might also start to emerge as one of those testing grounds of loosening, supporting, getting confidence back in Australia. I definitely feel like that could be one of those locations where that's very much prime for it. Like you said, Terry, with regards to Adelaide's growth, I think one very important thing I look into as well from research perspective is growth versus recovery. And when you have growth versus recovery, it's very easy to miss Adelaide on the map because you suddenly see the seesaw of what we've seen in Sydney and Melbourne recently. We've seen a 13 or 14% decline, and then over the last 12 months, another 13, 14% recovery in some areas. And to some people, when you look at that recovery in the last 12 months, you go, well, that's growth. Well, actually, that's recovery. And it's getting back to a point. But Adelaide, it's been achieving new peaks. And so that's just genuine growth, and that stable growth is something that's been there. So,
I mean, it's the most incredibly consistent market in the country, I think. As you've mentioned, there's peaks and troughs, and particularly in Sydney and Melbourne in the last 5 years, but Adelaide just keeps on chugging along, being incredibly consistent and showing steady growth. And if you isolate the right parts of Adelaide, that they've shown above average growth in their prices. So it offers incredible level of affordability and value for money, particularly relative to the bigger cities, much better rental yields, very low vacancies right across the city. A lot of postcodes are 1% or lower going into this coronavirus period. So it's ticking a lot of boxes. And then when you add that consistency factor, I mean, what does it not have that investors want? That's the question I keep asking, because it tends to fly under the radar screen and many investors miss this opportunity.
Yeah, and I think, Terry, as well, when I start thinking of those buying strategies, and I think of Adelaide as an example market, when people are looking during this time for investment opportunities, and obviously it should be for that long term, but when they're trying to focus on the now while looking into it, we're talking about affordability where the ratio of income, which is deemed affordable, usually 30% is that mark. That's that sort of broad statement. We've got many councils in Adelaide, the Tea Tree Gully Council and a few surrounding regions there where people are having 20 to 26% affordability rates in select suburbs. And when you think of that, that's a good, healthy amount of income to cover rents and mortgages. And when you think of that as well, JobKeeper stimulus, all the stimulus, this record package that the government supported, affordable properties like we've seen across many of that 300 to 400, 350 to 450 in Adelaide, these regions are going to be so much more protected when you think of stimulus in the range of that fortnightly level. That's going to help so many both investors out from having tenants that are able to still make that affordable rental payment, as well as landlords as well, who can go, hey, we're in suburbs where almost 8 out of 10 people own their property, whether with a mortgage or paid off. Just imagine you've got that, you've got affordable prices you bought many years ago, and you've got interest rates with a 2 in front. Now that ad with a 3 in front sounds like it's ancient. If you remember the Aussie home loan ads that used to talk about the 3 in front. Then all of a sudden you put that all together, you've got some very affordable regions where the stimulus is very much a sweet spot for some of these areas. Would you agree?
Oh, absolutely, I do. And another important factor is in determining which markets are going to handle this situation better and come into recovery better. And it very much comes down to some core factors like the makeup of the local economy. And I think Adelaide's very strong in areas which are going to stand it in good stead moving forward from this situation. For example, in my mind, it's the Silicon Valley of Australia. It's the high-tech innovation capital by far. Many of the national and international companies that are in Australia that have that, who play in that space, the high-tech innovation space, have their national headquarters in Adelaide. Businesses like Technicolor has been involved in the making of movies for the last 50 or more years. The Tesla battery, Elon Musk, his business, he set up his headquarters in Adelaide. Australia's new space agency headquartered in Adelaide, and so it goes on. And that's a very important sector to be strong in, because what we've learnt in this coronavirus period is the importance of technology, and some of the businesses that have boomed have been technology businesses like Zoom, the medium by which we're having this conversation today. So that's a good thing for Adelaide, and also think that out of this situation we're going to have a revival of manufacturing in Australia, certain types of manufacturing, because we've realised the folly of having so many things made offshore, particularly in just one country. And I think we're going to see a surge in manufacturing, and Adelaide's very, very well placed to benefit from that as well. So I think its situation in the current crisis and its ability to come out of it strongly is very, very good indeed.
Yeah, Terry, me and you we could talk forever about a great region like Adelaide and its potential there. And I guess, I mean, touching on to just what we like about it is where strategies can come up. And what I'd love to share now is just a couple of strategies that, we've been applying that I think could be very useful for people who are out there trying to make purchases and trying to, protect but still grow their wealth as well whilst they're out there. And on a positive note, applying strategies like this can really be, supportive on that confidence factor, which I think when you've got headlines flying around that are silly in my opinion, one day it's 40%, one day it's 20%, one day it's 10%. I think from these, it's important that confidence is restored. And I guess what I want to share is, something we've been doing, which is like a three-stage approach. Stage one is recognizing markets like Adelaide, regional Victoria, parts of Sydney and Melbourne even. Looking back to pre-COVID, where were we? Just before we went into some of these restrictions, what were we sitting in? Markets, our biggest markets recovering strongly. Brisbane, Adelaide, many regional Victoria and other markets producing new peaks. Just so much confidence in that sector, all-time low interest rates, infrastructure spending that was quite high. I think when you think of that, that's a starting point. Are you going to base your analysis based on the last 2 weeks, the last 3 weeks, or are you going to base your analysis on what are you seeing pre all of this that's very new to us all? That's a starting point from a strategy perspective.
Yeah, I think that's a great starting point. I think people should be looking at the situation with markets before we came into the virus crisis and then look at the makeup of the economies and ask the question, how well situated are they in terms of where most of the employment is in that particular location in terms of recovering and coming out strongly. So I think that's a great starting point for a strategy and making decisions about where to buy.
Yeah, and I think, Terry, from that starting point, the next thing becomes, I believe, personal comforts and factors. And, some people are drooling for that distressed deal in their eyes, whatever that looks like. And then there's other people who are going, look, I just really need stability during this time point. And there will be markets where pre-COVID, that strength that was there in pockets may have some vendors looking to sell. They've probably reacted to media in a way or something, or personal circumstances. But then there'll be a lot of pockets that are stable. And I think once you understand your personal comforts, that from there allows your eye to focus in certain areas to go, look, what is it that I'm really after? Am I someone that's trying to buy that deal? You may not even find that deal. That's the first thing. Secondly, are you after something with that stability during this period? Are you looking for that confidence? Because from there you start to look at factors, which is how do you hold that property? Do you hold it with no income, or do you hold it with a rental income? And from that rental income, I think that's where the next analysis really needs to be applied before you start looking into that starting point. Are you looking at areas that are having some job impacts during this time? Are you looking at areas where listings have risen? Are you looking at high-rise stock, apartments, townhouses, or are you zoning in just to your backyard and that's all you'll ever know? And I think that's where that second component of the strategy is helping people look at that risk comfort, but then also helping people try and analyze how far their sort of viewpoint is. Do you think sometimes, Terry, that in a strategy with the investors that you talk to, or just the audience that you talk to, people can be very much confused by markets simply because they look for just their market and what they're looking for to hear? What are your thoughts on that sort of backyard view that many people have when investing?
Yeah, well, I think firstly that many people who are interested in property investment don't even have a strategy. I think that's the most dangerous thing that's out there. Now, the people who do have a strategy and have actually thought about that are well ahead of the herd. But I think the other problem that people have is they are herd animals and they follow the herd, which is why so many people are sitting on the fence at the moment, whereas I think the intelligent ones are seeing this as an opportunity and they're out there actively looking with their strategy as a background. But those who just think in terms of their own backyard, for example, I think missing the best opportunities because it's very unlikely that at any point in time the best opportunities to buy well for future growth are going to be in people's backyards. Once you get beyond that, it opens up the whole of Australia as your market, and then you've got all these other possibilities. And also it introduces important elements that you want to have in a portfolio, such as geographical diversity. It's amazing how many people I speak to who have multiple properties, but all pretty much in a bunch in the one sort of location or in the one city or in the one state, whereas which introduces all sorts of problems like land tax, but also the dangers of having all your eggs in one basket. So you definitely don't want to do that. So I think diversity is a very important word for people to have in their mindset when approaching a strategy for property investment.
And that sort of rings a bell with the Ray Dalio principle of all-weather portfolio. And, Ray Dalio, a very, very famous investor, for those who don't know, and I guess with all-weather, to me, that's all about how do you continue to invest, even today, and even yesterday, and even tomorrow. He'll always believe of investing is a greater good, is the greater, good for your financial future. But how do you continue to create an all-weather portfolio? And it takes me back to a personal journey, where I own a property in Sydney, and I felt like I had the short straw pulled when the market didn't go good. But I realized, wait, it's not just me; it's everyone here that's having that impact in parts of or pockets of Sydney. But then I had a moment to think, hold on a minute, a whole bunch of our properties in Tasmania are doing fantastic. In the coastal town of Burnie, that were just rocketing away over the last few years. And that made me have a moment to sit back and go, whilst one market was doing this, another market was flat, another market was rising. And that's where this all-weather perspective comes in, where we need to look at it as an investment strategy to go, even if the headline said 10%, 20% on the boom or the decline, not all locations are doing that. Some locations are doing more, some are doing the opposite, and that's where all-weather comes in. And the other part that really, on that strategy is opportunity cost. They're probably my two favorite things to think of: all-weather, opportunity cost. Buying property in 2002 to 2010 in many parts of Sydney, and I keep referencing that as I'm living here at the moment, that would have been the equivalent to many investors from 2010 to 2020 or 2018 in Brisbane. When's it going to be Brisbane's time to shine? That question that people kept asking. You could have said the same thing in Sydney from 2002 to 2010. And that's where opportunity cost comes in. If we don't consider our backyard and beyond that backyard, we'll constantly think that every market is not performing based on what we see, or it is performing. So I just wanted to, I guess, touch on that as part of a key part of the strategy. But the next part of the strategy I wanted to mention, Terry, was what people can apply as tactics during the rental negotiations with buying property. And I have this hierarchy of 4 things, right? Number 1 is, great, we find a tenanted property. You don't have to go through the journey of, looking for a tenant or going through that journey of trying to find someone during this period where many might feel uncomfortable. Number 2 on that level is a rent back. You'd be surprised how many on the ground things that we're seeing right now. Vendors are so comfortable to sell and rent back. About 40% of our purchases over the last month have been going through a rent back with vendors. So that's a very, very interesting thing I'm seeing, largely during this time period. The next thing is longer settlement periods and having clauses where you can have a rental campaign held once the property is unconditional. So you've passed all your tick boxes in the contract. In between that and settlement, sometimes it's 2 weeks, sometimes it's 4 weeks, but having some sort of agreement with the vendor side to go, is it okay once a week or twice a week we can do this? And then the last and final one is the location is really what matters, and the data behind that. It may not be tenanted, and just going through the journey of finding one shouldn't be too difficult once you align all the eggs together, and everything's in that sort of review point. So I thought I'd share that. What are your thoughts on some of these strategies, Terry, during this point where investors can go through these different things to tick on their journey?
Yeah, well, I think in terms of the whole business of finding a tenant. A very, very simple thing is to be very, very aware of the vacancy rate in the area that you're targeting. If you're buying in an area that's got a vacancy rate of 1% or lower, you're going to find it relatively easy to find not only a tenant but a good one, because you're going to have people competing in that kind of a market. And it's amazing right now, leading into the virus crisis period, how many locations around Australia had those sorts of very, very low vacancies. Many of the really good regional markets in Australia did. Across Adelaide that we've talked about, many of the postcodes of Adelaide have vacancies at 1% or lower, or maybe 1.5%, but that's still very low. And what it means is that in this period where more properties are coming into the permanent rental pool, because those who have them as Airbnb, for example, that's no longer functioning, so they've started to put in the rental pool. Those with a vacancy rate of say 0.8% can have vacancies actually treble in that market, and it's still an acceptable vacancy rate. So it's a very, very good point to be very, very aware of in choosing where to target. Fortunately, many of the best markets that I would otherwise recommend in Australia do have that factor of very low vacancy rate, so that makes that whole business of finding a good tenant very soon after you buy much, much easier. Yeah,
and I think, on a positive note here, Terry, to cap up what we've discussed, it's really, guys, for those who are looking to invest and looking to grow wealth during this time, I think really it should be a focus on strategy for you, a strategy for your long-term wealth creation, seeing what the research out there, the likes of yourself, Terry, and what else is being produced, just to make sure that you're making a decision that involves strategy, appropriate tactics for the time, protection, because that's what strategy is all about: protecting your wealth, but also having a game plan to grow it. And I think in today's world, it's more important than ever to have one, because I think once you really set that part together, that's where the long-term wealth creation of housing really starts coming together. Not just so much, the exact market of what I bought and where I bought. It's about having that strategy that combines that with it as well.
Yeah, I know. Strategy is so important. We have a kind of an investment 8-step process that we tend to talk to customers about, and actually looking for the property that you want to buy is step 6 in that process. But what we find is a lot of people start at step 6. As soon as they decide that they want to get into property investment, they start looking for something to buy without actually doing the preliminaries, which is developing a strategy which is based on all sorts of factors about yourself, including the objectives. But so many people just don't even think about that, which I find amazing, but that's the reality.
Yeah, I mean, I totally agree, Terry. And on that note, I think with regards to strategy, as people go through this period to review what might be the right investment choices for them, there's going to be constant changes, constant things that can come up in the world of media during this time. And whenever I reflect on property and all that we've been through as just humans, what we've been through in the tough times that we faced, my father's fathers, the story that they've shared. One thing that goes on and on and on is just the fact that we get through it, the resiliency, and we're showing that here. And when you think of that in terms of a strategy, the good times continue, and they will continue. And along the way, there's always been bumps. And I think from that perspective, it's just about constantly making decisions that you feel comfortable with along the way. And strategy, to be honest, is all about creating comfort with a plan. There is no sort of master plan that solves everything for all. We're all unique in our own parts. And in the current climate, strategy will really be what sets people apart. And if you're wondering, hey, Arjun, I saw a market that went down a little bit, will it go down again? It'd be the same sort of guidance I'd say to people who've been, trying to purchase when Sydney and Melbourne had their little up and down. If you purchased below the peak, the question is, are you looking? Do you understand where that next below the peak is, and the one below that? The truth is we don't know, but one thing you can guarantee is when you buy below peak is you bought below peak. And so I think from that perspective, from the long-term view, we've got to remain confident and positive on that front.
Yeah, well, I think a key part of a sensible strategy is taking a long-term view. And, it's, as they often say, it's only a loss if you sell. So most markets do go through cycles, and there are periods when market may go backwards a little bit. But, if you take a long-term view, you're unconcerned by that. I think share market investors that I know who have most of their wealth in the share market take the same view, not terribly concerned about the recent upheaval and meltdowns, because their view is it's only a loss if you sell, and we don't intend to, and we take a long-term view. I think that's important for real estate even more so than other forms of investment.
And I think with that long-term view, we've got something that's an absolute pillar to support that. And right now, that's low interest rates and the rental yields that are out there. Harry, just to look at some numbers at the moment, when people are thinking of their personal scenario, just take into account that in today's investing world, even if you had a rental yield on your property and the rent you received was around 4.5% or just below that as a yield, that would be able to cover interest, rates, water, landlord insurance, property management, and at least $500 of repair, and still give you an extra $500 to $1,500, depending on which council or state you're at for the rates and rules. So I think in today's times, when you think of that, where a tenant is in a partnership with you to support their housing need, as well as grow, you're in your partnership to grow your wealth. When you've got someone covering all your real expenses, even at a 90% loan, that's the numbers I'm talking about at 4 to 4.5 rental yields. With today's interest rates, it's shocking to see how you can't hold through that long term when you consider the opportunities that exist with the long-term hold and the interest rates that are there.
Yeah, and to have a mentality of accumulation rather than buying and selling. I don't understand the strategy of trying to generate wealth by buying something, waiting for it to go and selling it, and then buying something else. I think if you own good real estate, you hold it forever. Basically, you just keep it and keep building, keep adding to it, accumulate, and that's how wealth is generated with a real estate strategy, I think.
Yeah. Well, Terry, that's it from me in terms of jumping on and just sharing some tactics, strategies, and things to think about when it comes to buying in today's environment. I'm hoping those who are watching this can, take just one thing out, whether it be from a rental matter, whether it be from a long-term confidence, what property markets have done, or just the good news signals that we're seeing across places like Adelaide right now, South Australia, with 13 days straight with no COVID cases. So thanks everyone and for tuning into us.
Okay, it's been, as always, a pleasure to be talking to you, Arjun, and to be discussing my favourite topic, which is residential real estate. Okay, everybody, bye for now.